Good morning. You are watching a live market outlook for Thursday, 3rd of November 2011, pardon, prepared by Windsor Brokers. The focus today remains on the focus today remains on the Greek problem, G20 meeting, yesterday's Fed rate announcement, and today's European Central Bank meeting and the rate announcement, the first time under the new management with Mario Draghi taking over from Jean-Claude Trichet. And these are the highlights of today, as the Eurozone remains under threat after 2 days ago announcement of Greek Prime Minister Papandreou of calling for a referendum in order to vote for the current austerity plan to help Greece. The threat of Greek exit from the Eurozone actually is hanging over now of today's meeting of G20 leaders in French Riviera, after France and Germany made it clear that Athens must decide urgently whether it wants to stay in currency bloc or to leave it. The summit is starting today in Cannes in France, and the focus is on reforms of the global monetary system and the steps to rein the speculative capital flows. But the shock decision, as I mentioned previously by Greek Prime Minister, will actually will open the tasks on today, talks on today's meeting. It will increase the number of subjects that will be discussed today, as this comes unexpectedly and is now posing a strong threat to whole Eurozone bloc. The Papandreou was last night in France the evening before the summit, and was given a strong warning by French President Sarkozy and the German Chancellor Merkel. They were both actually anger with his recent action, and that actually sent the global stock markets and euro currency sharply lower. They managed to convince the Greek Prime Minister to bring forward the referendum to early December, and insisted it be focused on the broad issue of whether Greece wants to stay in the currency bloc, rather than limiting it to vote on a new 130 billion bailout package, which strong majority of Greeks oppose. So basically now the question for Greece will be whether they want to stay or they want to leave a Eurozone bloc. Some more information we'll have today after the G20 meeting. However, nothing before the referendum in Greece starts, and the earliest expectations are by end of December. Some speculations yesterday were saying slightly before Christmas to start, and to give the clear answer from Greece whether they are staying in the Eurozone or they are leaving. The next thing also is today's ECB meeting and the rate announcement with Mario Draghi taking over from Jean-Claude Trichet, and actually he's expected today to play safe, as this is his first policy meeting as European Central Bank President, and will be likely looking to project calm rather than being panicked into ramping up the bank's response to the escalating Eurozone crisis. A change in interest rates is unlikely at the meeting of the ECB's 23-member governing council, which decides actually on policy just 2 days after Mario Draghi took over the ECB presidency. And actually this is in the middle of the crisis that now it's threatening to engulf his native country, Italy, which is the next country after Greece. Actually, the debt problem, Italian problem, is much bigger than Greece's one, with estimated debt of 1,900 billion euros. So moving the the crisis from Greece expanding to Italy would give the disastrous results for Italy and for whole Eurozone blocks. The financial markets will be listening carefully to today's Draghi's comments on the press conference after the rate announcement for any signals on whether he stands ready to carry on or even scale up the ECB bond buy program, a controversial tool that has led to the resignation of two German policymakers. As we know, the ECB usually announces their next steps on the press conference that comes after the rate announcement, and they usually using the same terminology that always signals whether the bank is ready for to act on their next meeting or rather to stay pat. The previous President Trichet had a clear vocabulary for these things, and we hope that Draghi will continue the same way. So will give us actually on the meeting after the meeting on the press conference gives the clear signals what will be the next steps of the European Central Bank. Yesterday's announcement of U.S. Federal Reserves slashed the forecast for growth. They raised projections for unemployment and said it was a possibility of buying more mortgage debt to spur the struggling recovery. While the members of U.S. Central Bank policy setting panel voted 9-1 to hold a steady course, one official urged more stimulative action now, and the Fed Chairman Ben Bernanke said Europe's debt crisis posed a big economic risk. At the news conference after the two-day meeting, the Bernanke said buying more mortgage-backed securities was an option to help the economy, and added that the U.S. Central Bank was still looking for ways to give clearer guidance on the policy path. Further important subjects for today, as we mentioned, the GDP. The G20 meeting today is the focus. Immediate reaction of yesterday's and 2 days actually ago, Greece announcement for the referendum sent the euro and the commodities lower, and this trend still persists despite yesterday's corrective attempt to recover some losses. The negative tone now is back in play, and later on in the technical part we will see the current movements and the expectations for the day. Briefly to today's calendar, apart from the ECB rate announcement that comes at 12:45 GMT and expected to stay unchanged at 1.5%. We have the from US non-farm productivity quarterly that is due at 12:30, and the expectation is 2.6% growth versus the negative result of -0.7 for the previous quarter. And then unemployment, weekly jobless claims from US due also at 12:30. Expectations are to drop to 401,000 compared to 402,000 previous week release. Now let's take a look on the markets and see the recent movements. As we can see on the daily Ichimoku studies, the euro-dollar stays broke and holds below the daily Ichimoku cloud, signaling further weakness ahead, as the recent strength of 131.45, which is the low of 4th of October, now is losing traction, and over half of this move has already been erased. On the 4-hour chart, we can see that the recovery from a fresh low at 136.07 posted on 1st of November, after losing the initial strong support at 136.55, was short-lived, as the pair lost power on a break above 138.00 handle, actually on approach to 138.36, which is the 12th of July 2011 swing low, and the fresh weakness emerged from here. currently at 136, 137 zone, but outlook is for further weakness as the studies remain in the negative tone, especially the hourly ones, with the 20 days moving average at 137.30 on hourly chart, maintaining the current downtrend. Widening again, hourly Bollinger Bands are signaling further weakness. Loss of 139, 36.07 is expected to open fresh losses towards 135.65, low of 11th of October, and also 61.8% Fibonacci retracement of the up leg from 131.45 up to 142.46 high of 27th of October, below which would signal an end of the corrective leg from 131.45 likely mark the top at 142.46 and expose levels at 135 and 133.60 respectively for retest. On the upside, the immediate barrier at 137 has already been regained. However, break above 138, 138.26 is required to ease the current bear pressure and open way for a stronger recovery on the upside with 138.70 and 139 coming next. Cable is again getting weaker after finding good support at 159, which was the previous low of 26th of October, also hit on 1st of November. Actually, it's 158.90, where the temporary ground was found for this short-term recovery. That regained the 160 handle as initial barrier, but again stalled at 160.40, even on the renewed attempt at 160.36, and fresh weakness broke below the strong support at 159, extending losses so far to 158.75. On the daily chart, we can see that 55 days moving average on the daily still holds the downside, with ascending 20 days approaching now. So holding above here would still keep the broader picture uptrend in play. However, on the upside, the clearance of 161.38 and the previous highs at 61.51 and 64. 61.38 is the 200 days simple moving average. Break here actually is required to signal fresh strength and resume the recovery from 152.71. Holding below here keeps the focus to the downside, and the loss of 158.75 opens immediate support at 158.50 and 157.82, which is Fibonacci 38.2% of 152.71 to 161.64 ascent. Dollar yen remains completely flat after some signals of fresh weakness occurred yesterday when the pair briefly broke below 7800, that is now initial support. Currently moving within extremely narrow range, directionless trading. We have the extreme levels at 77.75 on the downside and 78.40 and then 79 on the upside. The break of either side is to signal the near-term direction, as the pair currently moves in the sideways mode and shows no signals of any direction. At the same time, the daily studies are still in the positive mode, and currently looking still having space for a fresh strength and possible test of 79 and the key barriers at 79.52, which is the post intervention high, and then 200 day simple moving average at 79.84, above which is to open way towards 80 and the 80.23 initially 4th of August high. On the downside, 77.75, as I mentioned, is the initial support, pending intervention from action from Bank of Japan might is still on the table, and it's likely to become a reality in case of a break below 77, 75, 77.50, as Bank of Japan officials said that will be acting in case of further strengthening of national currency, as too strong yen is harming their economy. Dollar Swiss is regaining strength again after initial pullback from a fresh high at 89.57 on 1st of November, found a temporary support at 87.92, and currently is traveling higher, a regain of approaching 89 barrier and 89 barrier, which is our initial resistance. Broken trend line from 93.13, the fresh high posted on 6th of October, now acts as support and holds the current gains, with the hourly 20 days moving average currently at 88.46 underpinning the advance. Hourly studies are slightly into positive area. However, the RSI is again pointing lower as it approached the overbought zone. We might see some ranging here with the limits at 27.92 on the upside, at 89 on the downside, and 89 on the upside. Required break of each to signal the near-term action. However, the broader uptrend from 85.66 low of 27 October remains intact, but the clearance of 89 and 89.57 is required to resume. The 4-hour studies are in positive territory for the moment, but losing momentum at this point might signal some reversal, with the 87.92 expected to contain in order to maintain the current uptrend, the short-term uptrend from 85.66. Commodities are again slightly losing traction, as the gold failed yesterday at 17.44 on approach to the previous high at 17.52. Continues to consolidate, as we can see on the broader picture. They consolidates the recent rally from 16.03 low of 20th of October, with the 16.81 fresh low breaking below 1700 and 16.95 supports, offering now strong support as the pair briefly regained strength and returned to the levels above 1700. Break above 1744.52 is required to resume the recent recovery, and they immediately open next level at 1771, which is the Fibonacci 61.8% of 1920, 1532 decline. Loss of 1700, 1595 and 1581 is to signal fresh weakness, and likely to open levels at 1600 for a test, and that would weaken the short-term structure and turn focus to the downside. The crude oil is still in the sideways range, trading after hitting fresh high at 94.58 on the 25th of October, with the upside limit at this level and the downside range floor at 89.16. The hourly and 4-hour studies are still skewed more to the downside, with some elements of the negative tone, as the 93.74, the previous high of yesterday's high actually, is lower, series of lower highs from marginally lower highs from 94.52 keep the focus to the downside. The immediate focus is at 23.6% retracement, and the low of 26th of October, which is at 90 level, below which opens 89.16, and possibly further weakness towards 87, which is 38.2% retracement. On the upside, the strong barrier is at 95 level, which is 61.8, pardon, 50% retracement of the broader downtrend from 114.80 down to 74.94, also 200 days simple moving average, break of which is required to resume the current recovery, short-term recovery from 74.94 low of 4th of October.